After Adobe's latest report, their stock dropped by 13%. So, is this time to buy or is this a trap that will lead to losses? Adobe has been around since 1985 and company began developing products for computer long ago before I had a computer with the internet. One of their products that remains relevant today is the PDF file. The company had a dozen of other products, but it faced the competition for each of them, leading Adobe to focus on three main segments that generate most of its revenue. Digital media includes Creative Cloud and Document Cloud. This segment focuses on tools for content creation and management as well as digital documents. Digital Experience offers platforms for managing customer experiences through Adobe Experience Cloud, which includes solutions for analytics, commerce, and content personalization. Publishing and advertising covers traditional products and solutions for publishing and advertising. Although the company competes with giants such as Microsoft and Apple, in my opinion, Adobe still remains a leader in its fields. Now, let's look at the financial indicators. The company has shown steady revenue growth as demand for its products continues to rise. Net income has also been stable, but since 2020, it appears the company has hit a sort of ceiling. Comparing profits and net income from 2020 to 2023 shows that while revenue grew from nearly 12 billions to almost 20 billions of dollars, net income stayed around 5 billions of dollars. The company wasn't ready for such a fast increase in revenue after the pandemic. This led to higher costs for new offices and servers, and inflation made things worse. That's why we see these numbers. The company's assets has grown steadily, with about a 50% increase since 2020. Its debts have risen too, but at a slower pace since its assets. Adobe also has a lot of cash and is buying back its own shares. My final assessment of the business is 6 out of 10. While Adobe is currently a leader in its fields, it faces tough competitions. The company offers a wide range of products that meets user needs, but many of them are easily stolen by piracy. However, Adobe seems to take a relaxed approach to piracy. Even if people use pirated versions, they still work on Adobe products, and when these people later work for companies, those companies are more likely to use Adobe products, generating future revenue for Adobe. Adobe also has a competitive advantage in terms of the availability of training materials for its products. Their tools are so popular that finding books or guides or how to use them is easy. From my own experience, Photoshop is user-friendly, and when I tried using other products, I had no interest in watching long tutorials. So Adobe remains ahead of its competitors. Today, a share of the company can be bought for $520, giving it a market capitalization of 232 billions. This is what I dislike about the business. The company has only 15 billions in assets owned by its shareholders and generates 5 billions in net income annually. Personally, I wouldn't pay more than 150 billions for this business, which means buying today, in my opinion, would be overpaying by 82 billions of dollars. Honestly, I find it difficult to predict the short-term and long-term future of this company. On one hand, the company has invested heavily in business over the past few years, keeping net income at 5 billions of dollars. This theoretically means that these investments will decrease in the short term and net income will increase due to past investments. On the other hand, many tech giants like Tesla, Intel, Google, and Twitter are starting to lay off workers to satisfy investors. This could lead to decreased revenues for Adobe. If a recession does occur, Adobe will face problems such as decreased profits and increased costs due to past investments. Thus, I consider the stock to be quite risky, and personally, I wouldn't hold more than 2% of my total portfolio in Adobe shares. Look at the company this way. If a recession does not occur, the company might grow to at least $700 per share. If a recession does happen, the stock could fall to $250 per share as seen in October 2022. Numerically, in the short term, holding this share is not advisable as you risk losing more than 50% of your investments for a potential 30-40% gain. As for the long-term outlook, things are also uncertain. The company is a leader now, but it may not remain so in the future. Its digital assets could depreciate due to competition and declining positions. However, if Adobe expands its market presence in rapidly growing countries like India, it could earn substantial revenue. I hope I have explained my thoughts on this business. Personally, I would avoid it, but if you want a risky asset with high potential returns, you might consider adding Adobe shares from 1% to 2% of your portfolio, but definitely not more than 5% of the total value. It's a very risky asset, and that's all for today. Subscribe to my channel so you don't miss the next videos.